There are a fair few companies doing this digital asset treasury play. Why are you the one to go with?
So we are not a buy and hold treasury. We are an institutional vehicle that is generating risk-adjusted returns, actively managing Ether.
Okay,
Ether is a productive asset, unlike Bitcoin. And in having Ether on our balance sheet, we have to stake it and use it to participate in the decentralized financial economy, where we're able to actively generate yield.
Okay, you're also not the only one that's looking to bring yield. I'm thinking what BitMine and others are doing out there. So how do you distinguish yourselves as the experience with which to allocate, the experience with which to drive yield? I know that you're age-older in the ETH space and a co-founder of Consensus, but well, the CEO of Consensus and the guy who co-founded ETH is backing another one.
Yeah, so we have amassed the Avengers of Ethereum. Our technology team is unparalleled in experience and the creation of proprietary technology to generate this yield. And basically, we're able to outperform the exchange traded funds that don't have yield and the ETPs that are only able to participate 50% capacity in staking. And we are able to stake, which is the only thing that the ETFs would be able to do, restake, which is using Ethereum's proof of stake mechanism to secure other middlewares, and then use Ether as pristine collateral in the DeFi economy to further generate additional yield.
What's interesting is this is almost about a little bit of PR for the Ethereum ecosystem more broadly. You talk about it catalyzing the ecosystem, and you've got some big institutional strategic players who've come on board with this particular initial announcement. I think in Pantera, I think in Kraken. How long do they hold? How long do they stay with you after the SPAC is completed and you continue to trade?
So all of our capital partners, we believe, are long-term money. We had no fast money in this vehicle. And these are other people that believe that Ethereum is essentially the next generation of the internet. With Bitcoin, you have one asset that is moving on that ledger, the Bitcoin. With Ethereum, you can have and tokenize infinite assets, such as stablecoins, real-world assets like parcels of lands, stocks, bonds, derivatives. And with those tokenized assets, you can deploy them into what are called smart contracts. So arbitrarily complex legal agreements. And we believe that Ethereum is in the earliest innings of the next generation of the internet.
It's interesting that ETH has so lagged Bitcoin as an institutional play, though. And we just think in the recent years, we have seen it just not perform in the way that Bitcoin has as an institutional asset. But now you get the Genius Act, potentially going to give more regulatory clarity. Now you get the bet on DeFi. How do you think, though, it can perform against Solana or other rival protocols briefly?
So Ethereum is the largest beneficiary of these regulatory tailwinds because Ethereum is where these assets reside. 90% of stablecoins and high-quality liquid assets reside on Ethereum, whereas only 10% are splayed between the other blockchains. And furthermore, we believe that Ethereum is poised to have essentially what we call a gravitational pull, where more of these assets are going to be settled on top of Ethereum.